Hello everyone, welcome back. This is Fike from the Black Box. Today we'll be analyzing this BTC USDT. So you can see this Bitcoin versus Tether US or whatever. We are on the monthly time frame, as you can see on the monthly time frame. So we'll analyze it and we'll work our way down to the 2-hour time frame, because that is our final time frame that we will be using, right? So first of all, let's just start from here, right? As you can see here, we had a consolidation on 2018, right? On 2018 we had a consolidation, 1 candle, 2 candles, 3 candle and 4 candle, and finally broke out by the 5th candle. Then what happened? It retested. Okay, someone could have sold right there once it broke out here. Then you determine your TP by measuring the height, right? The height is just this one, so you measure it down. So as you can see, it never hits the TP, so trailing a stop loss has a major role in this strategy, right? It was too close to the stop loss, the take profit, but it never hit it. If you draw the Fibonacci, you can see that the Fibonacci's TP was hit, but never our black box TP. The height of the box was not hit, so that is something to consider, right? So whatever works for you, you just use it. Just use it. Let's just change the color right here. So the style, I don't like the Fibonacci, the background. Where is the background? We don't want the background, we don't want the price, we don't want the levels. All we want is the TP, right? I mean the take profit, right? The take profits. So as you can see, TP1 was hit right here down here, beautifully nailed it. Okay, you could get out there, or you could wait for this to happen, but you gotta trail your stops. I tell you 1,000 times, you gotta trail your stops. Once you are in profit, once this big candle has been formed, trail your stop to the downside, at least half of this candle. Okay, when this candle is right here. This is the first consolidation that we had in 2018. Nice sale. This could have been nice sale. So let's jump to the next one. Okay, let's jump to the next consolidation. So a consolidation is just a sideways movement. If you find 3 or more candles trading sideways, stacked up in a row, consecutive candles, then that is a consolidation. That is a valid one. Then you gotta connect it. You will connect that one. As you can see right here, we got nothing. We have no 3 candles in a row. This is not 3 candles in a row. You might consider this one, but no, that's not it. Because why? Because this thing broke to the downside. Okay, broke it. This thing is weak, should be equal to the previous 2, but that didn't happen, so there is no trade. What about here? Only 2 candles, so we got no trade. Just like this. Okay, after that, the Bitcoin shoot up. Okay, it shoot up to 40,000. I think it's 62,000, and made a weekend reverse direction. Until here, we got no trade at all. There is no trade at all for us. The black box model does not work in these trending moves, right? These trending moves are for the other strategies like the indicator trading. We don't want this. This is where we take our profits, not where we enter. If you are on the lower time frames, you could find something, but if you trade on the monthly, there is no trade. On this one, there is no trade. When you come here, we have, what do we have here? We have a consolidation, right? We have 1, we have 2, and we have 3, 4, right? We have 3 and 4 candles, 4 candles. You can just connect these things, right? So connect these things just like this one. This is a consolidation. We got 1, 2, and this candle made it out up, right? And this candle's wick is equal to this the previous candle's low, right? So it is even better it is above this candle. It didn't break this low. If it did break this low, this swing lows, then we can't consider this thing as a consolidation. We consider this thing as a trending market, and the breakout already occurred. Why? Because it broke the previous low, right? It broke the previous low, but in this case it never broke the low. It traded sideways, so that is what we want. Then finally what happened? A breakout happened. Where? Exactly right by this candle, right? So you enter a sell right there. If you are on the monthly time frame, you could enter a sell, and just do this one. Do this one. Then after that, what happened? You enter the sell, right? So bring your TP. TP can be determined by using this thing. Bring it down here. And as you can see again, the TP was never hit, right? Why? Because this is a fake out. This is a fake out, that's why the TP is never hit. And this is why trailing your stops come into play. Okay, trailing your stops is very crucial. It is very crucial, and we need that element into play, right? So what happened is, this is the third model, right? This is the single fake out, the third model of the black box. What happened is, after you are in profit, after trailing your stops, I told you that after this big candle has formed, hit its bottom, you have to trail your stops at least to half of it, to the half of it, so that if it swings back and forth, then you do not get caught. You eat more profits, you get more profits when the markets move further, right? If it doesn't move further, then you are in profit. It doesn't matter if it comes back and hit your stop loss. Your stop loss is in profit, so you don't even care. The play comes when this market came up and broke the upper level. When it broke the upper level, that is where you enter a buy again. After entering a sell here, you are in profit. You already are in profit. Your stop loss is hit in profit, and you enter a buy right there, because the third model is in play right there. What happened? The second model came into play. What did the market do? The market broke the upper structure, showing you the opportunity to enter. And what did it do? It supported. It found a support. That is a break and retest, the second model of the black box, and then it shoot up. It is more than the TP. More than the TP was hit. As you can see here, this candle filled the TP. If you use a Fibonacci, you can easily see that the TP is right there, half of this candle. Okay, that is why trailing stop is better than getting out of after the first TP of the Fibonacci is hit. As you can see, it hit the second TP, and then the third, and then the fourth. After the fourth has been hit, now look what the market did. It started to retrace, right? It started to retrace. So this is a great trade. This could have been a great trade. A great trade if you had entered in. It was in February 2023. It was recently. It was recently that happened. And again, what do we have here? Another consolidation. 1, 2, and 3. Then we found the fourth one. we found the fifth one because it is in a range. Okay, it is still in a range. It didn't break the high, it didn't break the lows, so we can assume that this is still trading in this range, right? So you mark it. You mark this thing like this one, and what happened was it. This is a real breakout. This is a real breakout. It broke to the upside right there. Okay, that is where you enter. So you place your stops. This is a monthly time frame. This is for swing traders. It's not for day traders. Okay, you put it up there, and look what you got right at the second candle, right at the finish of the second candle. And that's beautifully hit. Okay, your TP is hit, and that is amazing. It never looked back. The market never looked back after hitting your take profit. On the Fibonacci side, as always, the Fibonacci tells you to get out at TP1. If you get out at TP1, you are getting out at halfway of the market, okay, missing out the others. So all you gotta do is you gotta trust this one. It's the height of this consolidation, not the Fibonacci, okay, not the Fibonacci. After hitting this TP, after this candle filled your TP, what you gotta do is you gotta take 70% out as always and let the other 30% run. As you can see, the market continued moving up and hit your third TP. That is beautifully executed right at the tip. Your third TP is hit. All I recommend you to do is wait for the third TP and never the fourth, okay? Because the fourth is very rare, very rare, and it does not always happen. But the third and the second and the first TP are the most high probable take profit points that you will get your money. Okay, so we had on these 3 years, on the monthly time frame, on these 3 years we had three setups, three beautiful setups right there. The one is right there. You could have sold when that market broke to the downside and the retest, and then boom. Okay, the second amazing setup was right here. One sell and then another buy, boom. Another setup we got right here, then a buy. This one is the first model, this one is the third model, and this one is the second model. Okay, second on the monthly time frame. This is it for 3 years. I think in 2018 up to 2024 we have these setups on the monthly time frame. So let us get back to the weekly time frame. Okay, I told you we will be working down the time frames, right? So let us delete this and go back to the weekly. So you press 1 and W and enter, right? So that is all you have to do. Let us come back there, and on the weekly, as you can see, we have a lot of setups. As you can see, we have a lot of setups. A lot of setups. Do you see any consolidation here? No, I don't. This is trending. It broke the upside. It broke the upside. It broke the downside. So this is no consolidation. Do you see a consolidation here? Of course, I see a consolidation. What happened? 3 candles right there. A 3 candle consolidation right there. 1, 2. If the market had broken down instead of going up, we would consider this thing as not a consolidation, but a trending one. So we do not take a trade. But it doubled and it folded up and stacked up and made 3 candles. So that is a valid 3 consolidations. This is valid. What you gotta do is wait for the break to happen, and it broke it. Nice buy right there. Beautiful buy. And we will measure your TP from there to there, and as you can see, you will get out on the third candle, right? On the third candle. Don't get me wrong, this is a huge peep, a huge point, okay? This is a weekly time frame, so it has a huge point. As you can see, as always, Fibonacci tells you the halfway to get out at the halfway, but this, the height of the consolidation, tells you the exact, okay? So you will get 70% off, you let the other 30% run to TP3. As you can see, the market never looked back. It moved up and up and up and up, and it never stopped. It never stopped, okay? So we don't need anything more than TP4. So yeah, that is the market's thing. This is abnormal. This is not normal. This is not normal, right? But we had this good setup right here. Let us go to the next. Do you see any consolidation right here? Of course. Where? Right there. 1, 2, 3. Okay, 3 of them. You connect this one like this. And what you gotta do is you are doing here. Look what I did. Look what I did. What I did. Look. Come on, look. Have a closer look. When you see that a closer, I didn't cover all of these wicks. Why? Because there is no equal wicks down here. There are no equal wicks. What about up there? I didn't cover the wicks up to up there. Why? Because there is no equal wick. This candle didn't go up. This candle didn't go up and made equal highs. Okay, so when you encounter these kinds of formations, these kinds of candle patterns, all you gotta do is connect the equal parts. In this case, the equal parts are the bodies, so you connect the bodies. What happened? The market broke to the downside. Beautiful execution. That is amazing. That is amazing. So what you gotta do is measure the height. Once you enter the sale, you will be measuring the height and you will be putting your TP down here. Your TP exactly nailed by this candle, by this single candle. This single candle got you out of the trading. Beautifully executed. You can measure the point, how many points you could get by selling this thing. That is almost, if you get out on the TP1, that is 3,000 points. 3,000 pips. Huge. 3,000 pips. Market in a day can give you only at most 60 pips, 60 points. But here we got 3,000. 1 week of trading, only 1 week of trading. If you had entered on Monday, you would get out on Sunday, right? Because the crypto weekend is from Monday to Sunday. It never stops. It's always trading. Today is Sunday, as you can see. Saturday, I'm sorry, Saturday, January 27th, and we are still trading up there. We are still trading, okay? So, nice trade right there. Let's use our Fibonacci from down here to we use the Fibonacci to do what? To determine the TP3 and the TP2, right? The TP2 and the TP3. Let us connect this a little bit up. Yes, just like this one. As you can see, look at the precision. The precision. It is precise. It is amazing. It's really precise. As you can see, it hit to TP3. TP3 is the one that you need to consider, right? TP3 is the one you need to. I'm sorry, I'm checking if it's recording or not, because earlier I didn't check if it was recording or not, and I made a mistake. Alright, I recorded the whole thing, but when I saw it, the mic was not on. The mic was not turned on, and I killed my time, right? So I do everything for you. That's why I am recording again. Okay, and I want you to succeed, right? So what happened here is it hit the TP3, right? It hit 30% of your trade. It hit the TP3. That is beautiful. Beautiful, freaking amazing. That's freaking amazing. 70% out on TP1. You are in profit. You are jumping. You are dancing. You are doing whatever you want. You are doing your job. And you let the other 30% run, right? The market retraced. Your stop loss is up there. You don't give a damn. Your stop loss is where you entered at the first place. I told you when the market moves further, you trail it a little bit, not much. Do not trail it much. If you trail it too close, you will get out soon before hitting your stop loss. Look what you could have missed if you had trailed it to close your stop loss. This is a huge amount. If you measure from the top to from where entered to down here, that is a whopping 7,500 pips. As you can see it, 7,500 pips. That is huge, huge. That's huge, right? TP3 is hitting. That's beautiful, beautiful. Another trade right there. Next, what happened? Another consolidation right there. Beautiful. This is just beautiful. This is clean. This is clean. This is a clean setup. You don't get any cleaner than this. This is amazing. All you gotta do is pull out your box, your rectangle. Look what I did. I connected the wicks because they are equal. They are relatively equal. They are not exactly equal. They are relatively equal. Look how clean it is. Look how clean it is down here. I never connected the wick, this wick, because there is no other wick down here that is equal to this one. So this is just a breakout. So you don't connect it. You connect the equals. So what happened? The market broke out down up there, right? You measure your TP after entering a sale. Right there, boom, bring it down here. And what happened? Your TP hit and the market retraced back. Retraced back. So in this case, if you had trailed your stop, trailed your stop here to your entry point, then you will be out of the trade because as you can see, the market retraced and retested this thing right there. Let me scroll it. Let me expand it to the left, to the right. As you can see, it retested. So sometimes leaving your stops to where they were before is better. Okay, but most of the time you gotta trail. You gotta trail your stops. Okay, whatever happens, fuck it. Just don't fall for this thing, right? We got another consolidation right here. If you see this one, but this candle is higher. So this candle is higher. All you gotta do is you gotta connect the highs, the wick and the body side, and down here it is clean. Okay, you connect it just like this one. Okay, when the market reverses, it usually consolidates. As you can see, it consolidated then reversed. Right? What happened down here? Came up, then down, and then consolidated another consolidation right here. So what you gotta do is trail your stops. It doesn't matter what happens. If your stop was down here and the market could hit your stops easily and you will be out soon because you don't wanna pay the swaps and the other things to let the market to go. And the market didn't even went a lot, right? You got out right there, right? Your TP is right there, but it didn't move a lot. It just hit a little bit, a little box that is close to 50 pips or something. Yeah, it could be 50 pips or something. And who cares about 50 pips when you are making thousands of pips in a month? So no one cares. So that would have been another trade, as you can see. Another beautiful trade. Let's come back here. Do we have a consolidation here? Yes, we have. Right there. How do you connect this thing? You connect it by using this. you expand and cover this thing. This is a consolidation, right? 1 2 3. We broke it. No, we already broke it, that's for sure. But this candle is where we enter. When this candle retests that one, that's our sell. You measure your TP. This one is a little bit smaller, but we need this. So you can see the market exactly as this big candles low, as this big candles low. What if you had used your fib? If you had used your fib, as you can see, you could get out at TP3. I already told you TP3 is the most important one. So at TP3 you would get out there, out of the trade. Another beautiful trade. Where do you see another consolidation? Here in 2018 October, we had a nice consolidation. Okay, and what happened was the market broke out. So you enter a buy right there. As I already told you, you trade your stops, you enter a buy, you put your TP, your 70% will be out at exactly the after your TP is hit. Let me delay this one right there from the high to the bottom. Measure it. As you can see, TP hit exactly at the point. When you use your fib, but when you use your fib, the TP3 was not hit. Okay, TP3 is right above there, so TP2 was hit. I think TP2 was hit. So the most trusted one is this one, right? For 70, that's why we are getting out at 70%. And the thing that happened next is the most interesting one. Okay, the third model happened, that is single fake out. As you can see, single fake out happened. This is what the most amount of money would be made. This is where we make a lot of money right here. So what happened? It broke the downside. You consider the third model. You enter a sale. You put your stops again like this, right? And you put your, when your TP is hit, you let the other 30% run until TP3 is hit right there. TP3 by this big candle smashed it like it was great. I mean, there was no pullback, there was nothing. It smashed it right through TP4 and it consolidated. As I told you, TP4 and TP3 are where the market consolidates, right? And changes direction. Okay, another great trade right there. It is selective. We are selective and we have a particular model that we need to follow, and we do not enter everywhere. We do not enter everywhere. Some people think that bullish, now enter, buy 100 lots, boom, and immediately it crashed down, coming valley. It crashed like a, I don't know what. So trading using your emotions and without considering anything is not great. Okay, it's not great. All right. Do you see any consolidation here? Of course, I see another consolidation. Right? Why? Because this candle, what did it do? This candle came down instead of going up. If it came down, this consolidation is a consolidation, a real consolidation. This makes it a real consolidation. So what do? You cover this thing. As I told you, you never connect this one because they are not equal. They gotta be at least relatively equal, at least equal. If this thing was down here, then we would consider connecting, but it is not so. Let us measure our TP. We could have intraday sell right at the third candle. I'm sorry. right there. TP will be up there, a little bit down. Yes, this is a little bit closer. As you can see, TP was hit exactly at this candle, right? How do we zoom this thing? Um, as you can see, TP hit exactly at this candle. Let us measure it again. I think I have made some mistake because it is long. This one we should make it a little bit shorter. So as you can see, TP is hit by this candle right there. This candle, boom. So you are out. You are out of that 70% is out. You let the other 30% run. You trail your stops. It retested the market and then came down, right? And then finally came up, so your stop loss would be hit because you trailed it to close and you made a great uh, decision. That was a great decision that you did, right? So how much trade did we have? One, we got two, we got three, we got four, we got five, we got six. Every trade we select is a winner, as you can see. There is no trade that lose that we lost. There is no trade. There is no trade, as you can see. Six of them and all of them have given us a profit, and that is beautiful. That is the beauty of this market. I mean this strategy. What do you see here? Another consolidation. 1, 2, 3, and 4. You connect that thing. Especially when it is compressed like this, it is beautiful. You connect that thing. Which candle did break? That candle broke the consolidation. So you enter a buy. Your TP is hit. Why? Because of that candle right there. You let the other 30% run. As you can see, TP hit right there. Look how precise it is. Look how precise it is. Don't think that this is a small pip. This is a weekly time frame. It is a huge pip. Okay, and if you have the patience, as you can see, look where the market did go. It went roaring up, rallying up, but no one can assume that it would go up. No one knows if it goes up or not. So all we can do is from the moment is just measure our TP and wait until TP3 is hit. TP3 is right where that consolidation occurs, right? So that is where you get out. That's beautiful. That's amazing. And so that is a trade right there. That's a trade right there. Beautiful trade. Beautiful trade. Next, what do we have right here? No, we got nothing because this thing went up. Okay, maybe in the lower time frames, but in the weekly there is no trade. This thing is trending, so this is not a good thing. You can measure this buy, but I don't recommend it. I don't recommend it. This is what I recommend. This is what I recommend right there. What do we have here? We have some good consolidations down here. You cover everything that has consolidated. As you can see, I connected these bodies and the wick, not the upside, right? What did the market do? First, it broke to the downside, as always. As always, then you measure your TP because you are selling. Because you are selling, you measure your TP, right? Yeah, right there. That is the height of this thing. Then you measure your TP. TP is hit exactly right there. They are exactly equal. They are equal. Your TP is 70% out. You trail your stops to your entry, so the market retraced back and broke to the upside. Now what do? You enter a buy. You enter a buy. And when you enter a buy, the same thing applies. You wait for the 70% to be hit. Right there, 70% hit, and let the other 30% run. How do you do that? Just like this one. So you can see at TP4, exactly at TP4, hit at TP3, but you would normally get out at TP3. That is enough. That is a lot of pips. That is not a simple. You cannot assume this is very small, so I don't need this. No, no. This is huge. That is 2000 pips. That is 2000 points in 1 week of trading. 1 week of trading. 2000 points. That's huge. That's huge. That's unheard of. So, all of the trades played out well. They are beautiful, 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 beautifully executed. What do we have here? Another thing. But in this case, this was not a consolidation because we cannot connect this one. Because at that time, the market, what did it do? It went straight back, down, not up. First it went down and then up. So that's not a consolidation. But after this, after this 5 has have been formed, you could say that this is a consolidation. So how do you connect it? How do you connect it? As you can see, they are relatively equal right here, right? So you connect all of them right here. You connect all of them. You connect all of it. Because the market could come down, easily come down and fake you that it is coming down to the downside, but it never. So what did it do? It went up, right? I told you, if they are relatively equal, you gotta connect them. Just connect it, right? As you can see here, I connected the equal parts. So it went up, it broke out. You measure your TP, boom, you put right there, exactly as this candle. You will be out. The other 30% will run where? Exactly right there. 2 TP3, but in this case TP3 was never hit. But maybe my measuring is not right, so TP3 is exactly hit at the tip, exactly. So your TP3 30% would run in profit, would be in profit. You trail your stops around here, so it doesn't, you don't even care if it comes down, and your TP3 is the most the maximum profit you will get. So don't ever push it. Don't push it, okay? Don't push it. In this case, we don't have any consolidation. Maybe in the lower time frames. Maybe this candle came down, so that could count as a consolidation, right? So all you gotta do is connect this thing with this one. As always, you do not connect the wicks because there is no equal wick, right? You connect this one and you wait for the breakout. The breakout happened, you enter the TP and you ride it until it reaches the downside. TP3 could be around here, so no, I'm sorry, around here. It is very tight. The consolidation is very tight, so yeah, it's around there. So you could get out right here. So if you include this wick, you include that wick and that wick, that will give you the exact TP right there. So you'll get out there. but we don't even care about that. Next, what do you see here? We have another consolidation. How do you connect this thing? You connect it like this one, right? I'm sorry, these are relatively equal, so you connect them. You connect this one a little bit up, and as you can see here, we got a break right there, so you enter a buy because it broke. It's broke, right? So you enter a buy. Your stop loss down here. We don't care if it comes down. We don't even care. We will be worrying. We will start worrying if. I'm sorry for that. The mic just got disconnected. So as I told you, you enter a buy right there. So the market retrace, that is break and retest. That is a break and retest. So you enter a buy. So as you can see, your TP is hit. Right up, I put it right there. As you can see, your TP is hit exactly uh, at the tip. So that could be another great trade. So another great trade. But it never went to TP3 and TP4, so we don't even care because you trailed your stops. Your stop will be around here. Okay, because when the market reaches here, your stop will be around here, so it doesn't matter. The next thing, we had another consolidation up there, 1, 2, and 3. Okay, but in this case, what we do is we connect this one because they are equal. They are equal. You connect this one. You connect down here. Well, what happened is we broke the downside, so you enter a sell. And you determine your TP by using this one. As you can see, your TP hit right exactly at this candle. It's beautiful. Another great trade. Do we have something here? Yes, we do. 1, 2, 3. Range bounded. 3 candles. They are in a range. How do you connect? You connect it like this one. Equal parts, equal parts. You enter a buy. Boom. Put it here. You will get out right there. 30%. And the other TPs will run. The 30% will run. The 70% will get out right there. 30% will get out right there. Up there. Okay. Up there. But the market, wow. It never stopped. It went and went and went and went. And it went. And that is it. Next, what do we have? Do we have anything here? Nope, we don't. Nope, we don't. 1, 2, it broke it. 3, nothing here. It is 2, still 2. But this thing makes it 3, okay? This thing makes it 3. So what do? You combine it with this one. It's like this one, right? This is a consolidation. 3 candles in a row. In a row. You enter a buy up there. You determine your TP. Boom. That is where you get out. You let the other 30% run. That is where your TP3 is hit. Boom. You will get out there. 30%. Do we have a consolidation here? 1, 2, 3, 4. We do have a consolidation there. What do? You connect it just like this one. That is what you do. You determine your TP. First it broke the upside, right? This is what you do. Sorry, let's measure it again from up there to down here. Your TP, as you can see, TP is it, beautifully nailed it, boom. You get out 70% out, you let 30% run, you trail your stop, you are in profit. The market broke the downside, you enter a sell. Your profit, your TP is right there, as you can see. This candle could get you out on your first TP and retrace the back. Okay, retrace the back and your stop would be hit because your stop is trailed to your entry level. So that happens and it went a little bit down. Okay, so that is a great trade, another great trade. Right here we do have some consolidation, right? So in this case what you do is you are connecting this thing, right? Just like this one, connecting the equal lows and the equal highs, right? It broke the upside, you enter a buy, but in this case it never hit the TP, right? It never hit the TP. But you were in profit. When you are in profit, I told you to trail your stops. This is a huge importance, right? A huge importance, as you can see. When it pierces it, you enter a buy, right? This alone is a huge that is 2000. What? How is that possible? I don't know how that is possible. 2000 pips? I don't think that is right, but it says 2000 pips, so you will be in profit. You will trail your stops up there to where you entered. So the market came down. You don't even care, okay? You don't even care because you are in profit already. Then it broke the downside. That is where you are interested because you are now in the third model, that is single fake out, right? It faked you to the upside, but now you enter a sell, right? This is the head, so you determine the head. So the TP, right? The TP is exactly it right there. TP 70% out. You trail your stop until half. You don't care if it retraces. That is not your business. It retraced back and finally broke to the upside. So broke the upside. Maybe this is a double fake out, but I don't even care in this case. But if you see it on the measure, uh, you connect just like this one. You connect this thing. These are equal, relatively equal. So measure on the bigger picture. When you see it on the bigger picture, it is another consolidation. If you see it on the monthly, this is a consolidation, right? 4 candles and 4 candles. 2 candles and the third candle went up. So this is where you enter a buy, boom. TP is it exactly. TP hit. You put it up there, as you can see, TP hit, boom. Beautiful. So 70% out, and that's it. Right here we got another consolidation because the market went up. Okay, it never retraced back, it went up. So you connect this thing just like this one, but actually connect this just like this one. They are not never equal, so you connect just like this one. You enter the ATP, you measure the TP from up there to down here, boom. You let the other 70% run, 30% run. So as you can see, TP3 it exactly at the reversal point. Beautiful. Do you see any other thing? Yes, of course I do. Where is it? Exactly right there. Exactly right there. Another TP hit, boom. If you measure the TP, that's beautiful trade right there. That is a couple of thousand pips, as you can see. TP hit beautifully, right? When you come down in another consolidation, this is beautiful. This is clean. It is just like an algorithmic trading or something. I'm sorry. I wanted the rectangle. Connect this one, and you enter a cell down here, right? So you measure your TP, boom, and you bring it down here. You wait for the TP to be hit exactly right there, hit, and you let the other 70% run. From down here to the other 30% run. I'm sorry. So you can see until TP2 is hit, boom, you will get out. You are trading. Another consolidation down here. What you do in this case is you are only connecting the bodies. Why? Because these kinds of long wicks cannot be connected like this. Do not connect it like this. You are connecting it like this. This one has no equal counterpart, so you leave it alone. When it breaks the upside, you enter a buy, boom. The TP is it right there. A TP4, boom, you get out there. Down here we got nothing, but up there we have something down here. So you you mark it out and you enter a buy. TP1 is it, you don't even care. That's beautiful. Another three, 1 2 3 4 5 in a row. Another consolidation right here. In this case, what happened is the third model, you are in profit. You are in profit, but it came crashing down into, so trailing your stop has its importance. So you enter a sell, your TP is hit. That's beautiful. Another consolidation, not there but down here, right there. That is a consolidation right there. What do? You enter a buy, boom. It is around TP3 is around here, so you get out here. This is another consolidation. Why we have boundaries, the downside and the upside is another consolidation. We got another consolidation here, TP hit, boom. We have another consolidation here. It's everywhere. It's everywhere, and everything is giving us profits. That is the most important thing, right? That's the most important. As you can see, it's a nice break and retest right there. So boom. So we had another consolidation down here. I was trading this thing in 2023, 2023, right? So when this thing started to go up, yeah, it is 2023 September. So after that, you enter a buy, your TP is hit, it came down into you, actually getting you out of the trade because you trailed your stop. So it doesn't matter. What you gonna do is when you see a break and retest and when you see a rejection, you are entering a buy, because there is the second model. Okay, every model gives you profit, every model. So this is a break and retest. You could have entered a break and retest. You can determine the break and retest. This can be determined, their tips will be determined just like this one. TP3 hit, boom, you get out of the trade. That's it. Now we have another consolidation. How do you connect this one? You connect it like this, because you connect it like this. So yes, because equal, we got equal wicks 1 2 and 3, right? But above here they are not equal, they are ragged, so we don't even care. Or in this case we are seeing some kind of double fake out, right? If it ends up being, if it breaks the upper side, we are entering a buy. There is no questions asked, we are entering a buy when it breaks the upper side. But if it breaks down, then it is assumed as a single fake out, then we will be entering a sell. Okay, clean, that is clean. So thank you very much. This is the monthly and the weekly. On the next video we will see the daily and the 4 hour. Okay, the daily and the 4 hour. I'll show you exactly what to do and what to where to enter the trade. So as you can see, everything has played out in our favor. Every trade. Look at this beauty. This is amazing. We had 1, 2, 3, 4, 5, 6, 7, right? 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26 setups in 2 years, only in 2 years on the higher time frames. On the weekly, it is on only in 3 years. In 3 years or in 2 years. So 26 or something setup, okay, around that. So I hope you found some information, some thing useful from this video. I'll see you in the next one. Okay, so thank you for watching, people.